Welcome to the private lending presentation. This presentation is for informational purposes only and is not an offer to sell securities. What we're about to share with you in this presentation is a hassle-free, secure way to earn superior yields. The agenda for this presentation, you will learn what is private mortgage lending, what's really in it for you and how you can benefit. We'll also share with you an example investment and our company's overview. Before we get started, let me share with you what this program is not. Private lending is not a get-rich-quick scheme. This program is a great, hands-free, hassle-free way to earn yields up to 3 to 4 times faster than any other investment option. The best part about it is your returns are predictable and, most importantly, secure. Let me paint this analogy for you and ask you this question. How does your bank make money today? Well, they take money you invest in CDs, mutual funds, money market funds from you and pay you returns of usually 1 to 3%. Then they loan out that money at a higher interest rate to other people to buy houses. With our private lending program, we're cutting out the middleman. So here is how our private lending program works. It's real simple. We buy houses and we sell houses. Now, in order to buy houses, we leverage our own funds with the money we borrow from private individuals. We have a formal closing with county recorded documents which used to purchase the house as collateral for the loan. For borrowing your money, we pay you 12 to 15% interest on the money we borrow. Here's the simplicity in our program. We are experts in finding undervalued property. We borrow money from you to purchase the property. We have a formal closing where you get a mortgage on the house with other important documents, which we're going to share with you later in this presentation. This availability to pay all cash for our houses allow us to buy properties at a significant discount. Now here's our blueprint for success. With our Capital Partner program, we look to build long-term relationships which can support continuous growth. And here's how. When our private lenders join us as a capital partner, they receive all the necessary documents securing their investment. Once all the documents securing their investment are signed and funding has been received by the title company, our company purchases the property. Our company then renovates the property and gets it ready for resale. Once we sell the property, you, the capital partner, get your initial investment back plus a 12 to 15% interest return on the amount you loaned. We can do this over and over and over for continual growth. There are 2 ways our capital partners receive payoffs from the funds they loan. The first way, which happens to be the preferred way of most of our capital partners, the day we purchase a property, interest will start to accrue until the house is sold. You then would get one check for the initial principal amount and the amount of interest which is owed to you. Or our company can make monthly payments if you need a monthly income. The monthly payments is best for living off a large lump sum of money. We have 2 superior rates of return. With our Capital Partner program, you can earn 12% accrued simple interest on first mortgages, or we also have an opportunity to earn 15% accrued simple interest from second mortgages. If you need monthly payments, the interest rate would be 9% on first mortgages and 13% on second mortgages. Many of our potential capital partners have asked us about CDs and the advantages of early withdrawal. Here's an example. If you invested $25,000 in a bank CD that is earning you a 3% return, you would have earned a whopping $750 annualized interest payment. Now, if you became a capital partner with our company, and we used the same $25,000 to help in purchasing a house, you would earn $3,000 at 12% interest and $3,750 at 15% interest. And here's the best part. Typically, the penalty for early withdrawal on a CD is $175. You still would make $2,075 more by taking an early withdrawal on that CD and becoming a part of our Capital Partner program. Now, I hope you can see why our capital partners get so excited about the types of returns we offer. Let's kick it up a notch and compare the difference if you invested $100,000 into a bank CD with our Capital Partner program. On an annualized return with a bank CD, you would have earned $3,000, but with our Capital Partner program, you can earn $12,000 to $15,000 annually. Could you use an extra $9,000 to $12,000 per year? Here's another example is if you are a capital partner and decided to receive monthly payments instead of accrued lump sum interest payments. Again, if you invested $100,000 in a bank CD, you would receive payments of around $250 a month. With our Capital Partner program, that $100,000 you could receive a payment as high as $1,083 per month. As a capital partner, you would earn up to $9,996 more with us than if you invested in a traditional bank. Now that you've learned about our superior yields you can earn with our Capital Partner program, now I'd like to share with you how we can buy houses so far below market value. My company has proprietary marketing methods and industry contacts which help us to find these deeply discounted deals. Our specialty is in distressed situations and distressed properties, which usually need some renovation. A key to our success for years is we know where to look, what to buy, what not to buy, and how to renovate. We create value by solving the situational problem with creative deal structuring or property problem solving through renovation. Each house that you become a capital partner with us, you'll be provided with the necessary documents securing your investment. These are the same documents typically a bank would use when someone purchases a home. This would include a promissory note, a mortgage, title insurance, and a homeowner's insurance policy naming you as the lost payee. You as a capital partner never have any expenses, and we handle everything, making this hassle-free. As we know, your biggest concern is protecting your principal. We have two rules we never break. These rules are enforced primarily for your protection. Rule number 1, the total amount of money borrowed on a first mortgage is no higher than 70% loan-to-value, LTV, of the after-repaired value. And rule number 2, the total amount of money borrowed on a second mortgage is no higher than 85% loan-to-value of the after-repaired value. This additional security is in place because we don't want to over-leverage the properties. We make money when we buy right, and here is an example of how we do it. Let's say we find a house. Next, we would do our research to find out what the true value of this house would be after it's renovated. This would be the after-repaired value. For this example, let's say the home's after-repaired value would be $100,000. Now let's say the purchase price of this house is $55,000, and the rehab cost would be $12,000. So the acquisition and rehab cost total cost would be $67,000. Using rule number 1, we could borrow up to $70,000, which would be 70% of the after-repaired value. Since our total is only $67,000 for the total cost, this would be a great deal for us and an excellent opportunity for you as the capital partner. Buying at 70% or less of the after-repaired value leaves plenty of equity in all our deals and protects your principal as the capital partner. Here's an example of a deal we've done recently. The property was located in beautiful Palm Harbor, Florida. Property was a pool home, and it was a 3-bedroom, 2-bath, 2-car garage with 1,428 square feet. The after-repaired value on this home was $170,000. Our purchase price was $105,500, and we estimated a rehab cost to be around $10,000. Here's the anatomy of this deal. Again, the property needed about $10,000 in renovations, and our purchase price was $105,500. The total cost would be $115,500 for acquisitions and renovations. Again, the after repair value would be $170,000. The total loan amount on this deal would be $119,000, which is 70% of the after repair value. This covers the cost of acquisitions, rehab, and carrying costs. Now let's look at your projected returns on a deal like this. $119,000 at 12% interest, a 3-month minimum, which we provide a 3-month minimum payment, would equal $3,570 paid to the lender, which is you. A 6-month loan would be $7,140,000 paid to you, the lender. And a 12-month loan would be $14,280 paid to you, the lender. Is this starting to sound interesting to you now? Often we get asked, is there a minimum time and a minimum amount of investment? Our investment opportunities typically last from 3 months to 5 years. As one of our capital partners, you will receive a minimum amount of 3 months interest on any investment, even if the house sells faster than 3 months. How's that? You can get started for as little as $5,000. So, how is simple interest calculated? It's called simple interest for a reason. Let's say you started with a $100,000 investment. You applied that to a first mortgage at 12%. You would earn $12,000 for every year until the house sells. That's $12,000 after 1 year, $24,000 after 2 years, $36,000 after 3 years, and $48,000 after 4 years, and so on, and so on, and so on. Another question that comes up is, what if you need your investment back? Well, what we typically do is match your investment needs with a specific house, so that doesn't happen very often. However, if a capital partner does need their investment back, we will cash them out with their principal and interest payments with no penalty, and then we replace them with another capital partner. All that we ask is you give us 60 days to do so. Let's hope this scenario doesn't happen anytime soon, but we have to answer this question. What happens to my investment if you die? Well, our business is structured to sell properties and pay you off. Your loan is still secured by the property, and once the property is sold, your principal and interest will be paid as agreed. Maybe you're in a position where you're wondering where you can come up with funds to invest. Here are a few examples where our capital partners have drawn funds to invest with us and become capital partners. They've used savings, CDs, whole life insurance policies, home equity lines of credit, retirement funds, pension funds, 401ks, IRAs, even the stock market. Some have even borrowed from friends and family at a lower interest rate to gain a higher interest rate. See, they're starting to think like a bank. Would you like a tax-free way to grow your net worth? Did you know that if you have money in IRAs, 401ks, or pension funds, you can self-direct your IRA or pension fund? Your returns on your investments stay tax-deferred or tax-free. And we can show you how to do this. It's simple, easy, and we do all the work. So you'll stay in control of your investments, and we do all the paperwork. First, if you haven't already, you open up an account with Equity Trust Company or Entrust. You would then roll your funds to your new custodian of your new self-directed IRA. You self-direct funds to the closing. You then earn up to 15% interest, and when the house sells, funds are sent directly back to the custodian, and you decide to do it again. Yes, it's really that simple. Most people aren't aware that you can borrow against your whole life insurance policy. See, there's a cash value to your life insurance policy, typically, which is earning CD rates of return. And once you take out cash from your policy, you can loan that money back out to buy houses and earn a 9 to 15% yield on that money. See, that's starting to think just like a bank. And home equity lines of credit are sometimes better known as HELOCs. If you use a HELOC, you would need to use the option that the investor would be making monthly payments to you because you will have a monthly payment. If you pulled $25,000 from a HELOC and were paying 8% interest, you will have a monthly payment of around $167 per month. Now here's the kicker. The investor would be making a $250 per month at 12% interest or $312.50 per month at 15% interest. Over the course of 24 months, after you paid your monthly HELOC payment, you would net $2,000 to $3,500 after 2 years. Are you beginning to see how you can operate just like the banks? Now, how about using friends or relatives? Using a similar example like the one we just showed you in a HELOC, say you borrow money from a friend or a relative and you told them you would pay them a 7% return on that money. You can then loan that money out to purchase a house and make an extra $1,500 to $4,000 on that money you never had. Now, isn't this what the banks do? We give them money to go make more money. The stock market. Is it a bull market, a bear market? What is it today? Where's the stability? That's what most investors are discovering with the stock market these days and pulling their money out. With our Capital Partner Program, there is no added stress with constant market fluctuations. No worrying about brokers with ulterior motives. We just provide you with a hassle-free, hands-free, double-digit returns. And when we began this presentation, we wanted to share with you what private lending is and how you can benefit. And we gave you an example of a recent deal. We shared with you strategies on where you can get capital to fund deals. Lastly, what we'd like to do is share with you a little background about our company. And first and foremost, this is a family-owned business. We're a Florida corporation with 17 years of real estate investing experience. We keep it simple. We buy, rehab, and sell real estate for profit. We are short-term and long-term hold on properties. This is what we do. And we're professional, courteous, and we grow our business through the use of private lending. And most importantly, we provide win-win solutions for everyone. We are a for-profit company. Our goal is to grow the company by providing housing to tenants, retail home buyers, and investors. We're currently buying houses mostly throughout Florida. We're also focusing on national acquisitions. Along with our years of experience and our proprietary marketing methods, our company has a competitive advantage through the speed we can research, purchase a property, and our knowledge of creative real estate techniques. We have great insight contacts throughout the industry which provide us with our capital partners with many great opportunities. So now, what's the next step? Well, by now you know how the program works and how you can earn hassle-free, hands-free, 9 to 15% starting today. So you really have two options. You do nothing because this isn't for you, and that's okay. And even though it's not for you, maybe you can give us some names of some folks who feel we better serve. Or call or email us as soon as possible and let us know you're ready to partner with us on our next deal. Once we have a deal that meets your criteria, we'll call you and you can pass or you can play. There's really no obligation. Now here's how you can contact us. Without our capital partners, we would have no business. So we're only interested in creating win-win relationships that are mutually beneficial. Our goal is to provide you with stable, consistent returns so you'll come back again and again. Now whether you become a capital partner or not, be sure to ask us about our referral partner program and our referral capital partner program. We will share with you more ways you can make money with our company. Thanks again for viewing this presentation, and we're ready to help you succeed. Thanks again.